Our next guest is an iconic American businesswoman, and boy, does she oversee a portfolio of delicious and wonderful products. I can't imagine a household in this country that doesn't have at least one and probably many products of the company she now oversees, Mondelez. Her story is a great one, an epic one in American business. She was the CEO of Kraft before taking the bold and by some measures controversial move of splitting that company between its grocery business and its snacking business, hiving off the company that we now know as Mondelez. In other bold moves during her career, she bought the iconic brands of Cadbury. And so that is part of the portfolio as well. She understands creating shareholder value. She understands dealing with activist investors and shareholders who have different ideas about how to run companies. She knows and has seen a heck of a lot in her years as a businesswoman in this country. Right now, Mondelez, a portfolio of brands totaling in all about $30 billion of business. Now she is making a succession plan as she steps away from the company that she actually built. And because she's stepping away from the company, I'm sure she won't mind sharing with us what the secret flavor actually is, right? She'll be interviewed by Sarah Eisen, my colleague from CNBC. Sarah is the only one here today on the podium who got a +1 invitation to this. You'll see why in a moment. Ladies and gentlemen, Irene Rosenfeld and Sarah Eisen.
Thank you.
Oh, good.
Put it all out there.
Hi. Good to see you.
Thank you, Tyler. And thank you to Irene. That was a great introduction. And I would just only add, as someone who covers the company, with a group of CFOs here, probably every challenge, each and every challenge and opportunity that you're facing, this woman has dealt with, and she has dealt with around the world. So, Irene, thank you for being here.
I'm delighted to be here, Sarah.
Your career has been defined by a series of big decisions, and your most recent decision was to retire. How did you make that call that now is the right time?
First of all, it's not really a recent decision. It feels recent because we went public with it in the summer, but the truth was it's something I had thought about for quite some time. In the consumer business, is a very rapidly changing one. I think there's real value in continuing to renew the blood. And so I had talked with our board a couple of years ago about my desire to retire around the 10-year mark. We weren't really explicit about exactly when that might be, but it felt like that would be the right time to turn the reins over to someone else. And that set in place a process to look both internally and externally, and that resulted with this election and the announcement of Dirk Van de Putte as my successor that we made that announcement in August.
And this will be your last earnings period this next week.
You know, I was just totaling it up. I've done 45 earnings calls over the last 11 plus years. And if nothing else, I think that earns the right to be able to retire at some point.
So that probably won't be the major thing you miss about being the CEO.
No, it will not. It will not. But good earnings calls are a very exciting high, I will say that.
What's also fascinating about your career, and we were just talking about this a little bit, is that you are the mother of so many other CEOs, that you've mentored so many people at your companies that are now running companies, Pinnacle Foods, Newell Brands, and it's not just in the consumer space. Yeah. Did you seek this out, that you wanted to do this?
I love the opportunity to mentor talent, and it's a two-way street. Obviously, the good talent is of great value to a business at any point in time, but it's incredibly rewarding to be able to nurture that talent and to develop it. And I am very proud of the fact that I had a hand in the careers of a number of folks. And each time I turn on CNBC and I see one of my folks on there, I'm really proud. And it's actually probably been one of the most rewarding aspects of this job.
How did you pick out your prototypes, or did they approach you within the companies?
You know, there's lots of discussions about how one decides on a mentor and who to mentor. And quite frankly, I think some of the artificial approaches that have been taken over the years are not appropriate. I think typically it needs to be a relationship that makes sense for both sides. And in my case, it was really the opportunity to pick talent, spot talent at an early age, and be able to continue to coach them and develop them as they moved along in their careers.
For an audience of CFOs, what would you advise them if they wanted to make that step to CEO?
I think the most important difference between being the CFO and the CEO is that the buck stops with you. And I think the best thing anyone who contemplates wanting to sit in the CEO's chair is going to be your comfort in making the final decisions. A lot of what a CFO typically does in the course of your careers is advisory, and it's very valuable and it's really important. But at a certain point, the buck has to stop and a decision has to be made. And I think your comfort with making those final decisions and living with the consequences, I think is a real test of whether that's something that you want to do.
So ultimately, are you disappointed that your successor is not someone you mentored and not someone you groomed from the inside, and is actually coming from somewhere else?
I would have loved to have been able to appoint one of our internal candidates. There's no question about that. But the reality is, this was a very thorough process. We were very clear about the experiences and the attributes that our next CEO should have. And I feel very good about the decision that we made. And I don't think it in any way diminishes the training or the opportunities that some of our internal candidates have had or their future potential.
We want to go through some of your big leadership decisions. There are way too many to talk about, but one that comes to mind, Tyler mentioned, was the split. Splitting Kraft into a U.S. grocery business and an international snacks business. At what point did you feel that you needed to split the company? This was happening way before food M&A was trendy.
Yeah. You know, it really struck me right after we bought Cadbury. I had my first management meeting. So we closed the deal in January of 2010. I had my first management meeting of the combined team in July of 2010. And we sat around the room, and there was the head of Oscar Mayer, and the head of Jell-O, and the head of coffee, and the head of Eastern Europe, and the head of Asia. And it really struck me, those folks didn't go together so well. And it was really interesting. As we had looked at the portfolio over time, it was increasingly clear that snacks were different than center-of-the-store items. And we had begun having that conversation. A lot of our bankers had approached us over the years, just looking simply at the multiples of what snacking businesses were going for versus mainstream center-of-the-store kinds of products. But that wasn't, in my judgment, that wasn't enough of a rationale to make that kind of a profound decision. And so we actually studied it for quite some time and came to the conclusion that we actually could run the company much more effectively if we were to split the two businesses, not only because our selling organizations could be more focused, but because our ability to tailor our supply chains to the nature of these individual products, to invest in state-of-the-art supply chains. And so on that basis, we really began to very seriously look at it. When I first took the idea to our board, because it wasn't such a very prevalent thought, they all said, well, yeah, there are clearly two different portfolios here, but why don't you just run them both under the same roof? And we thought a lot about that, but the truth of the matter is it is a very difficult thing to run a margin-focused, slower growth business at the same time that you're running a higher margin, faster growth business. And on that basis, as we talked it through, we came to the conclusion that it made sense to split the companies. And I would say if you look at the value creation that has happened, the ability of the Kraft grocery business to then get acquired by Heinz and then ultimately by 3G was exactly the sort of opportunity that would not have been possible if we had had a combined portfolio.
Why did you choose to lead the international snacks business?
I was the architect of our snacking strategy. I mean, one of the very first decisions I made when I came back to Kraft in 2006 was the fact we had a very disparate, very dispersed portfolio, and we needed to focus it. And very quickly, I came to the conclusion that snacking was a growth engine. It was clearly a behavior growing everywhere in the world. And certainly in the emerging markets in particular, there seemed to be untapped and boundless opportunity. And on that basis, having been the architect of the strategy as we thought about splitting the companies, I did choose to go with the snacks business.
Just to rewind a little bit, you mentioned the Cadbury acquisition. I guess that was, what, a year and a half before the split. It was a biggie, almost $20 billion acquisition. Yes. One that your biggest shareholder, Warren Buffett, called dumb. He called the deal dumb. How did you deal with that?
Well, I will say one of my lowest moments in the course of my career was the visit that I had to Omaha when I went to tell him that we were going to bid for Cadbury, and he told me that he wouldn't support it. And I wished he were supportive of it. I understood full well at the time the way the UK takeover rules work. There are some arcane rules that really govern how much cash you can put into the deal, how much stock you can put into the deal, and then what you can do in your subsequent bidding moves. And based on that, we needed to put the maximum amount of stock as consideration. It was a cash and stock deal. We needed to put the maximum amount of stock into our offer. And frankly, that was the biggest issue that Warren had, is that it was had we ultimately ended up offering that much equity, it would have been significantly dilutive to him. And if you know Warren at all, he doesn't like to be diluted. So that was a big piece of it. He also doesn't like to sell assets, and we made the decision to sell our pizza business at the same time. It was partly to help to raise some cash. It was partly a reality that this was a business that couldn't travel globally, and I would say I feel very good about that decision. We sold that business to Nestle at about 16 times EBITDA. We bought Cadbury at 13 times, and so it was actually a very attractive swap from our perspective. So I was not happy that Warren was not on board, but I was delighted with the fact that my board said, look, we've been studying this for 2 years. It makes all the sense in the world. It was the foundation for our snacking vision, and they were comfortable going ahead.
Did he ever follow up? I mean, when you felt vindicated and proven right by the results?
In his own way, yes. But Warren talks about when there's a transaction, he buys 2 cards, a sympathy card and a congratulatory card, and then he waits 5 years to decide what happened. And the thing is, he would acknowledge that a congratulatory card is in order here. We've created significant value in the formation of the snacking company, as well as I mentioned a moment ago, in the creation of the grocery company as well.
Do you predict that there's going to be more food M&A as this whole industry struggles to figure out the consumer and the macroeconomic environment and all the changes in what we eat and how we buy it?
I think there will continue to be quite a bit of focus on margins in a slower growth consumer environment, and to the extent that certain companies need scale and see an opportunity to be able to capture cost synergies. I think that will be a driver. I think there's a lot of euphoria now about what's going on with some of these smaller companies. For a company of our size, we're about $34 billion. These small companies, it's hard to find them. So in our case, we have chosen to focus on those assets that can teach us something that we might not know on our own. So for example, we bought a business a couple of years ago, a small $40 million business here in the US called Enjoy Life Foods. It's a allergen-free snacking company, and it gave us access to a bunch of recipes and a bunch of capabilities that would have been harder for us to access. We bought Vietnamese snacking company a couple of years ago because that's a very fast-growing market in Southeast Asia. So in selected areas, we will continue to look for opportunities, but these small things take a long time to nurture and to really bring to scale. So I think the near-term big plays will be for cost synergies. And again, in a case of a company like ours, we are sizable, we have very, very significant purchasing power, and that's of less interest. Our focus is much more at this point on growth.
It sounds like what you're saying maybe is that a lot of these companies are overpaying for some of these smaller growing hockey stick type sales companies.
That would be my observation. I'd be interested to see the business proposition on some of these assets that are trading at nosebleed kind of multiples.
The other theme that you've dealt with, and it's not just in the consumer space, but is a key topic for a lot of folks here, is activists. You fought them, you've made nice with them. What's the strategy?
Well, look, I've been dealing with them for a long time. And, Nelson Peltz came into our stock just as we spun off from Altria. So we've known each other for about 10 years. And the reality is...
and he's not here yet, so you can say whatever you want.
But he's coming soon.
Yeah.
He's been a very terrific business partner. He is now a member of our board since 2014. He's been a very productive board member. Bill Ackman got into our stock when we made the Cadbury acquisition. These guys tend to use or kind of event-driven investments, and it's not a surprise that they often show up as there are events that are happening that might change the multiple or create some value. But my experience has been that the best way to deal with them is to engage with them. And I found in both cases of both Bill and Nelson, we've had a very productive relationship over the years. And I think it's served us well.
So our CEOs and CFOs, some of them, would they be wrong to be afraid of an activist?
Yeah, I think afraid is the wrong emotion. I think engaging with them is the right answer. I don't think you have to do everything that they say. As we look through the list of things that keep coming over the transom, some of them are very good ideas, some of them less so. And you need to be able to stand firm and make sure that the things that you're actually doing are consistent with your long-term strategy. But I don't think being afraid of them is a productive reaction.
Well, so I'm just thinking of some companies, recent examples, that have fought hard to keep activists away. Engaged, but keep them off boards, for instance. Is there value to having an activist on your board?
I think, again, I can only speak about our experience. I think it has served us well. There's a number of transactions that we've done over the course of time. One of the other things that we were in the midst of, as Nelson had approached us, we were in the midst of spinning off our coffee assets, and it was not helpful to think about undoing that or having to worry about whether or not someone from the outside would see that as a valuable transaction. So we found it very productive to have him in the tent, and he has been a very effective board member in terms of really firsthand reflection of how the street will respond to various actions. And I think in the case of some of our restructuring that we've done, for example, I think he's been very supportive. And I think that signal to the street has been very helpful in terms of our ability to get support for what we're doing.
I wanted to ask you about the consumer. Understanding the consumer has been at the heart of what you've done probably your entire career, starting in the advertising world more than 30 years ago. What's the most interesting change that you are seeing right now with the consumer?
I think the single biggest, there's probably the two biggest changes that I'm seeing are that it's a two-way conversation. It's a dialogue, not a monologue. That is a profound change. And when I started off, we used to just beam messages out there, and the consumer just took them. Now the consumer is not only, we're beaming them out, she's coming back. And sometimes she's coming back with a totally different idea. I think our ability to harness that relationship is quite powerful. We've got over 40 million Facebook fans for our Oreo brand, for example, and it's been a critical piece of our marketing agenda. But at the same time, it is a very different relationship. The other thing is well-being. The speed with which the trend toward well-being has caught on has been profound. It's about snacking is about a $1.2 trillion category. Well-being products within that is about 160 million. It's a huge market, and the opportunity to access that consumer behavior, particularly for us as the largest snacking company in the world, the opportunity for us to play into that $160 billion category is important, but it's also a big opportunity for us.
How do you do that? How do you pivot a company with so many well-established brands and loyal customers looking toward the millennial and what the consumer wants right now without losing diehard fans?
You know, it takes a variety of different forms. Some of it is simply about making packages that are resealable, so you don't have to eat all of your Oreos in one sitting, as an example. It's about making smaller package sizes. It's about reformulating products. You know, people ask me, is chocolate part of your wellness program? Well, not directly, but the truth of the matter is the consumer is looking for lighter, aerated kinds of products. We have a product that we've introduced in many markets in the world called Bubbly. And lighter fillings, fruit fillings, seed fillings are the kinds of things that the consumer is looking for versus solid chocolate tablets that she might have been looking for a couple of years ago. In markets like biscuits, our products can play a critical role in the overall diet. We've got products like Belvita that allow you to basically eat it in the morning, and it kind of keeps your glucose level at a fairly stable rate, so you don't get hungry so fast. So there's a variety of technologies that we can bring to the party, but we can also make Oreo Thins, which is a classic Oreo in a thinner form. So wellness takes a variety of formats. Nobody's giving up their snacks anytime soon, which is great for us, but we are very careful to think about what we call mindful snacking and making sure that our snacks and the packaging that we provide for our snacks come in a format that can meet consumers' lifestyles.
What's the best way to learn? Do you look at the data? Do you pay consultants? Do you go out and observe consumers? How do you get a handle on that?
We do it in two ways. We do a lot of primary research, but quite frankly, consumers vote with their feet. And so we look a lot at trends. And as I said a moment ago, we've been quite surprised to see the speed with which even the emerging markets are migrating in the area of wellness. And it has certainly, a lot of our work has been here in the United States, but very quickly we're taking those products out to our emerging markets much faster than I might have thought we would be doing just as recently as 5 years ago.
Speaking of well-established brands, Oreo, were you afraid that when Donald Trump was elected president of the United States, he would target your company after many times on the campaign trail, calling out Nabisco for having production in Mexico?
Yeah, we were. Having been at the eye of the maelstrom when I bought Cadbury, it was an election year in the UK, and so poking at me became sport. I learned a lot about what it means to get in the middle of a political debate. We did everything we could to help both campaigns, because this whole issue of moving jobs to Mexico, there was a lot of misinformation about what we were and we were not doing. So we spent a lot of our time just getting the facts out there. We were not leaving Chicago. Our Chicago factory continues to be the foundation of our manufacturing base here in the US. We were moving some production to Mexico, and the combination makes us a stronger company and continues to support employment in all the markets in which we compete. So I was concerned about it. And I chose not to engage directly because I just didn't think that that was going to be a productive dialogue. And I think it's worked out okay.
He's been awfully quiet about it, but do you have a backup plan in case he starts calling you out again?
Yeah. Well, yes, I do.
PR strategy?
Yes, I do. And we have some thoughts about what we would do if we found ourselves on the front pages again. But my hope is that the best thing we can do is stay under the radar screen. I am told that the president's grandchildren are big Oreo fans. I think that by itself will keep us safe for some period of time.
Okay, that's good. A lot of people here, I think, have the Mystery Oreos and want to know what exactly they are.
I'd have to kill you. I mean, it's unbelievable.
I've tried this before.
To me
I knew she wasn't
that
going to answer.
how newsworthy the fact that we've got a mystery flavor of Oreos has been. And we're very, very excited by the response that we've gotten. And we look forward to all the entries that you are welcome to submit any of your entries. I don't know if you're offering a special prize here, but it is a flavor that many of you should recognize. So I'll leave it at that.
In our final minute, Irene, I just wanted to ask you, you are not the typical Fortune 500 CEO in many ways, but in one way, because you're a woman. Did that make this whole journey harder?
I don't think so. I mean, I'm proud to say I don't think so. Without a doubt, the statistics are not in our favor. I would like to see more women at the helm. But the fact of the matter is, when I was appointed, I was very pleased that the news coverage was about my background and my experience. It was not about the fact that I was a woman, and that hasn't been an issue along the way.
That's good to hear.
Yeah.
So what's next for you?
I'd like to start by getting a little sleep. I think that's a good next step. This is a 24/7 job, as so many of yours are, and I look forward to being able to back off a little bit. As I've said on a couple of occasions, I'm not going to sit on the beach, but I do believe that the experience I've had with the consumer, with analytical data, can be very helpful as we think about some of the new businesses that are being formed today and some of the new economy. So that's really where I'm going to spend a lot of my time. I also have enormous passion for education, and I'm looking at a number of different opportunities to see where I might be helpful there.
Good tease. Well, and hopefully you'll still be a regular guest on CNBC. We have enjoyed having you. And thank you for doing this today.
Thank you, Sarah.
Irene Rosenfeld.
Irene, before you go, indulge me. Do you get a full lifetime supply of Oreos in retirement or not?
Oh, absolutely.
Absolutely. I hope so. Now, I have asked Bob Iger and others, I asked Bob Iger what his favorite ride was at Disney World.
Yeah.
I believe he said Space Mountain. So I must ask you, and I know this is hard, these brands are all your children.
Yes, they are.
But what is your guilty pleasure, your go-to snack, your go-to item?
It's Oreos.
It's Oreos. All right, good. Irene, thank you so much.
Tyler. Thank you.
Sarah,
Thank you.
have some Oreos.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.